Imagine waking up one morning to find that the price of a single flower bulb is worth more than your house. Fortunes are made and lost overnight, not on gold or land, but on something as fragile and beautiful as a tulip. It sounds like a fairy tale, but it's a true story, one that unfolded nearly 4 centuries ago in the Netherlands. This is the tale of tulip mania, an event often dismissed as a quirky footnote in economic history, a bizarre cautionary tale about the madness of crowds. But what if I told you that the echoes of this ancient bubble still shape the way you invest, save, and even think about money today? What if this story from the 1600s holds the key to understanding the wild swings of our modern markets? Let's travel back to the early 17th century. The Dutch Republic is the richest, most advanced society in Europe. Amsterdam isn't just a city. It's the beating heart of a global empire. It's a hub of trade, innovation, and culture. Ships from every corner of the known world dock in its harbors, bringing spices from the East Indies, silks from China, and most importantly for our story, tulip bulbs from the Ottoman Empire. These tulips, with their vibrant, almost unnatural colors and exotic origins, were unlike anything Europeans had ever seen. They quickly became the ultimate status symbol among the wealthy elite. Owning a rare tulip was like owning a supercar or a limited edition watch today. It was a way to broadcast your wealth and taste to the world. But what started as a luxury for the rich soon spiraled into something much, much bigger. At first, tulip bulbs were simply a fashionable commodity, bought by those who could afford to plant them in their lavish gardens. But as demand grew, so did speculation. People began buying bulbs not to plant, but to resell at a profit. Prices started to climb slowly at first and then with breathtaking speed. Soon, everyone was caught up in the mania. Merchants, artisans, sailors, farmers, people from all walks of life poured their savings into the tulip market. It was a get-rich-quick scheme on a national scale. Contracts were drawn up for bulbs that hadn't even been harvested yet, in a system very similar to modern futures trading. Fortunes were made in a matter of weeks, and a powerful belief took hold. Prices could only go up. But beneath the surface of this euphoric frenzy, the seeds of disaster were being sown. The market for tulips became completely detached from reality. The bulbs themselves almost became irrelevant. It was all about the paper contracts. Bulbs were traded dozens of times before they ever touched the soil. The price of a single rare bulb, like the legendary Semper Augustus, could exceed the annual income of a skilled craftsman, enough to buy a grand house on an Amsterdam canal. The frenzy reached its absolute peak in the winter of 1636 to 1637. In the taverns of Dutch cities, men gathered not to drink, but to trade tulip futures. Some bulbs reportedly changed hands 10 or even 20 times in a single day. The entire nation seemed to be gripped by a collective delusion. Then, almost without warning, the music stopped. In February 1637, at a routine bulb auction in the city of Haarlem, buyers simply failed to show up. A shiver of doubt went through the market. Suddenly, people realized they were holding contracts for astronomically priced flowers that nobody wanted to buy. Panic set in. Prices didn't just fall, they collapsed. The bubble burst. People who thought they were rich discovered they were bankrupt. Contracts were broken, fortunes were wiped out, and lives were ruined. The Dutch economy, the most powerful in the world, staggered from the blow. The world was left with a new word for financial folly: mania. It's easy to look back and dismiss tulip mania as a historical oddity, a product of a less sophisticated time. But the truth is, the psychology that drove the Dutch to madness is alive and well in our markets today. The very same forces, greed, fear, herd mentality, and the illusion of easy money are what drive the bubbles we see in everything from real estate to cryptocurrencies. The story of tulip mania isn't just about flowers. It's a timeless story about human nature. Contrast the world of the 17th century with our own. Today, we have instant access to global information. We have sophisticated financial instruments and armies of regulators tasked with keeping markets stable. And yet, time and again, we see the same patterns repeat. Think about it. The dot-com bubble of the late 1990s, when any company with a "com" in its name was suddenly worth billions. The housing bubble of the mid-2000s, when people believed property prices could never go down. More recently, the sudden, wild rise and fall of meme stocks and digital coins driven by social media hype. Each of these episodes is a modern echo of that ancient Dutch frenzy. But why does this keep happening? Why do we keep falling for it? The answer lies in the way our brains are wired. We are social creatures. When we see others getting rich, a powerful fear of missing out, or FOMO, kicks in. We want in on the action. We start to convince ourselves that this time is different, that the old rules of value no longer apply. We actively ignore warning signs, rationalize absurd prices, and tell ourselves that we're smarter than the crowd, that we'll get out before the crash. It is only when the bubble bursts, when prices crash and the easy money vanishes, that we are forced to confront how vulnerable we really are. The legacy of tulip mania goes far beyond just a single market crash. It fundamentally changed the way people think about risk, speculation, and the very nature of value. In its aftermath, the Dutch began to develop some of the world's first financial regulations, including rules for futures contracts and standardized trading practices. The radical idea that markets could be irrational, that prices could be driven by pure emotion rather than fundamentals, became a permanent part of economic thinking. Fast forward to today, and you will find the fingerprints of tulip mania everywhere. The language we use to describe market excesses, mania, speculation, irrational exuberance, comes directly from this era. Financial regulators study past bubbles, especially tulip mania, to try and design safeguards for the future. Every financial advisor who warns you to beware of hype, to look for underlying value, and to remember that what goes up can come down just as quickly, is channeling the lessons learned from a 400-year-old flower craze. But the influence runs even deeper. The very structure of our modern financial markets owes a debt to the lessons learned in the Netherlands. The Amsterdam Stock Exchange, founded in 1602, was the world's first official stock market. It introduced revolutionary concepts like publicly traded shares, market liquidity, and price discovery ideas that are the absolute backbone of today's global economy. The tools we use to manage risk, from options to futures contracts, all have their conceptual roots in the innovations sparked by the chaos of tulip mania. And yet, for all our progress, for all our technology and knowledge, the basic human impulses that fueled the tulip bubble remain unchanged. We are still drawn to stories of overnight riches, still tempted by the promise of easy gains. The technology may have changed from tavern trades to smartphone apps, but the psychology has not. Every time a new asset class captures the public imagination, whether it's tech stocks, real estate, or digital currencies, the same cycle tends to play out. Excitement, speculation, euphoria, and for many, an eventual painful collapse. So how does this ancient bubble affect your money today? In more ways than you might realize. The regulations that govern your investments, the warnings on your trading app, the very way you are taught to think about risk versus reward, all are shaped by the lessons of tulip mania. When you see headlines about soaring prices or hear friends bragging about their latest big win in the market, you are living in the long shadow of that Dutch frenzy. But there's another, subtler way the tulip bubble lives on, in the stories we tell ourselves about money. Every investor, whether they know it or not, is influenced by the collective memory of past bubbles. We remember the pain of those who lost everything, and we mythologize the few who got out at the top. We use these stories to guide our decisions, to justify our fears, and to fuel our hopes. The tale of tulip mania is more than just a history lesson. It's a mirror reflecting our own modern anxieties and ambitions. It reminds us that while markets change, human nature doesn't. It's a powerful, timeless warning that the line between investment and gambling, between confidence and delusion, can be as thin and as fragile as a tulip petal. So the next time you hear about the next big thing, the investment that can't lose, take a moment. Think back to the canals of 17th century Amsterdam. And ask yourself, is this real value, or is this just another beautiful, fleeting flower? Thanks for watching. If you found this story fascinating, make sure to like, subscribe, and hit that notification bell for more deep dives into the stories that shape our world. See you next time.